Okay, what's going on, guys? SmartHelping.com here. I'm Jay. We're going to get into this plumbing business implementation of the revenue and expense assumptions. We'll see how far we can get today on this model. Let me do a sound check. Test. Wait. Test. Wait. Sounds good. Twitter. And don't forget, check out more financial models at SmartHelping.com. You can buy everything on the site for $9.99. I've also got tons of different categories here. The model I'm working on now, the plumbing business, will be part of the industry specific bundle, as well as obviously the entire site bundle. And that's all I got for you about that. Let's get into the modeling. Here we go. Now, it was interesting. Yesterday, we had a ton of viewers right at the end at 11 a.m. So that's a good sign. It means, YouTube's ranking the stream and getting a little bit of traffic, so that's awesome. We'll try to keep that momentum going. All right, so we've got all of our revenue stuff here we did yesterday. I've got some notes about what I want to make sure to track. We're going to default count into the plumber and truck count, which will run some of the variable expenses off of. But today, I'm going to see how far I can get on this thing today. Who knows how far we get. Let's put in the monthly detail. Now here, let me just pull just a standard format. This is all the tabs that we will have when we're done. It'll be all like this. So this is what I want here. Oop. Uh, color coding. Okay, the black is fine. And let's expand this out. Forecast starts here. None of this is relevant. Okay, perfect. And we'll go out 10 years on this model. Okay. All right, space it out by 15. Now this model really turned into something awesome. I've got brand new logic that I've not applied before. This could probably work the exact same for an electrician company. Um, but we're building it for plumbing specifically. I also had some notes here. I'm going to actually go to this and let's see. I want to put these actual tiers in here with the descriptions, just so you understand what's tier 1, tier 2, and tier 3 servers. So let's put that down here. And our reference for that credit would be right there. So let's put service descriptions. And put this here. Tier 1, tier 2, and tier 3. Yep, that's pretty comprehensive. I guess I could merge these. So it looks a little bit nicer. Okay. So we've got our tiers of service. So you can understand what I mean when I put tier of service up here. Now, let's see, what do we need to first start looking at? So we have job count by service tier. All right, so let's just go job counts as our first metric. So tier 1, tier 2, tier 3. And I don't want to actually label, I want to label this activity. And then here, this will be job count. So you get a nice picture of everything that's going on. We'll make all these assumptions very clear so there's not too much complexity in each of the formulas. So this is simply going to say if our date here is less than the start date of that tier, then 0. Otherwise, if the date equals the start month, then get our starting job count per month. Otherwise, and the only otherwise would be if it's greater than that date, then do the previous month amount times 1 plus, and then we'll just do an index with the growth rate for each year, by month per each year. So index that. Column we want to match year number with the year range. All right, let's see if all this works. We got to lock some stuff though. So lock this going across, this going down. Lock this going across, this going across. Actually, and down it because it's not going to matter. We're going to have to change the references. Okay, D8 is fine. Just remove this. And what we're trying to create here is just a really nice revenue forecast based on at least bottom-up assumptions that are defensible. What's not defensible is saying, well, I'm going to do $3 million a year. What is defensible is saying, well, I think I'm going to have this many jobs with this different tier price. Here's my expected revenue per job. Here's expected materials cost per job and all that. Then you have something that's at least defensible. And that is easily updated. Oh, this is not a dollar amount. This is a number. Okay, so we need to make sure this is working. So we start at 20 in March. We go up by 3%. Let's change this to 5 just to make sure it's changing. So the percentage change would be this minus that divided by this. This is just a check calc. So 3% we know matches. Year 2 is 5%. Okay, perfect. So it started out at a simple job count, and the amount of jobs per month are increasing by whatever percent you put in there. And it looks like it's working. Let's just drag it all the way across. And yep, okay, perfect. So that's working. You can see how the compounding really ramps up the job counts, and you could probably, now this is pretty scalable. Like you just buy more trucks, get more people, so your job count technically doesn't have a cap that you need to worry about. It's not really a capacity model because you can just scale into perpetuity depending on how big you want to get. All right, so let's go down to tier 2. which would be now 6 and 7 are 14 and 15. So 6 is 14. Anything that says 6 is 14, and then 7 is 15. And then we want row 16 on this. And I believe that's everything. So 15 starting out. Let's change this to April. Make sure it's working. And then let's also check our percentage growth. Checking it here is a lot easier than checking it down the road. Okay, and then let's change it to like 6% here. 6. Okay, so that's working. Drag this all the way over. And then finally, oh, shoot, this needs to come all the way over here. And then our last one, tier 3, anything with 14 goes to 22. All right, 14, 22. And then anything that was 15 goes to 23. Wait, what did I say? 15 to 23. Ah, I didn't lock that, so that was a higher one. So 23, this was locked 23. And then we need the growth rate 24. Okay, and we have August for that one, 10, and let's go 5, 3, make sure that works. Don't be afraid of decimals also. I see a lot of people who are new to forecasting are worried if you have decimals in a forecast. That's completely fine. It's more accurate than trying to round up to make it not be a decimal. Okay, so 5, 3. And it's just really representing a probability of value. Okay, total job count. We have that done. And we'll just kind of work down through all the assumptions until we have a P&L, a net operating income. Now, once that's done, we can do the annual. We can start doing some overall summaries. We'll add in the income statement. We'll add in some more complex financing things, cap table, capex, balance sheet, all that stuff. It should be pretty easy. We're just going to have, well, we will have an inventory item, but other than that, it's definitely not going to be as complex as what we did on the assisted living model last couple weeks. So that's cool. Wow, a little bit less activity today. That's okay. Um, all right, so we have job count. Now the next one, revenue assumptions, we need to know total value per job and project that out for each tier. Give me 1 second. So this is a little bit of an easier calculation. So we have total job count here, and then we'll have revenue per job type. This is then going to be total revenue. And so for this calculation, it's pretty simple. We just go, so all the timing assumptions are here. Oh, we also want to say if this date is greater than the exit month, then the forecast has to stop. So we zero that out. And I'll put that into these other two. So now if we stop the model earlier than 10 years, it will stop all the numbers. Then let's just make sure that's working. Perfect. Okay, so now we just go job count times average ticket price. So index average ticket price is right here in 9. And we match that with the year. Okay, and let's just lock all these because we're going to have to drag them down and re-edit the numbers. So all we have to do is change the reference to each row. So we've got 9, 17, 25. So 9, 17, 25. And there's our monthly revenue. Now, what I'm actually excited for is getting into the head counts and the truck counts and how we can do that. Should be pretty interesting. All right, so job counts, revenue. What else we got here? This is all dynamic. Where do we want to put? So truck count and head count will be relevant for salaries for sure. Because we need to know headcount to get all these different variable costs, payroll taxes, all this stuff. So let's see. How do I want to organize this the best? Job count, revenue. So we're going to need to know, so next up, let's do this. Let's do plumber count. Now, for this calculation, we need to add in, so truck count and plumber count will be outputs based on two. So we need to have an input added here for these that says um, average monthly jobs per plumber. How many jobs can they do in a month? And based on that, we can say, well, if there's 20 tier 1 jobs and each plumber does 5 jobs a month, then that is how many plumbers? 4. 4 plumbers doing 5 jobs a month is 20 for tier 1. So let's add a space here. And we have average jobs per month per plumber. And this number is probably not going to really change it's just going to be a static number. So let's say an average tier 1 plumbers will do, let's say, this is just arbitrary. I'll just say six jobs a month on average. So then we go plumber headcount tier 1. We simply go total jobs divided by 6 here. And then this will be a number, and it's fine to be a decimal. Yes, I know it's a head count, but again, decimals are forecasting probabilities of the future. So if you had a number like 3.5 plumbers, it just means, well, you have a chance to be 3 or 4. It's exactly in the middle, so 3.5 is the average, and the cost, the probability of value of that cost is 3.5. So don't be afraid of the decimals. So here's average plumber head count for type 1, 2 and 3 the same deal, and we just add in input for these two. So now we'll have plumber count, so 20 and 29. Total plumber head count. And that's it. So this is our scaling factor. So now we can see over time we end up with 251 plumbers doing 1,500 jobs a month at 1.5 million revenue. Excuse me. uh, so that's good to have. Also, we can group all these in case you want to minimize the amount of rows you're viewing at once. We group these. All right, so what is the next here? So we have head counts. Oh, average hours required per job. So this is we're gonna want this up here too. So total monthly hours worked. And this will then go by the total plumber count against the total hours being billed. So if we go, let's say, so total monthly hours worked would be job count times, and then this is going to be a variable because it could change over time on the average hours per job. So 10. And then let's match up the year. Okay, let me just think about this. So total jobs times average hours per job will give you the total hours being worked per month. Now, let's, so that's 10 and then 19, 28. And we would definitely want to make sure these numbers make sense. So here, 20 jobs, average count is 6 jobs a month. So you'd have 3.3 plumbers, each doing on average 6 jobs a month, 20 jobs. Okay, so that is good. And let's drag that over, make sure. 4.1. Okay, I just want to make sure this is matching up with 5.8. Okay, so it looks good. Total hours worked, so we have this. This is going to be needed for billing or wages to know how many hours. Now, actually, so what we have here, we have our total head count. So 3 in total, they're doing for tier 1, 30 hours in total, average 10 hours per plumber. So this is where you really get to see, what kind of activity results in what amount of work for your plumbers. And you can play with these assumptions. Like let's say I had 100 jobs per month, average of an hour and a half, and each plumber could do 6 jobs a month. That means now we've got 150 hours total, 16 plumbers, so they'd be getting 9 hours a month. And let's say you wanted them to get more than that, let's say 100 hours a month. What would have to be true? Well, your average jobs per month per plumber should be up higher. Maybe, let's say one every other day. Let's say a little bit more than that, say 17. Now let's see what this looks like. So, I have 150 divided by that, so 25 hours a month. Okay, so but you get the point of how the forecast is working and what assumptions, how they're relevant. So this is I really like the way model is flowing. What's going on, guys? Hey, there we got some people. That's what I'm talking about. Welcome to the financial modeling empire. Um, we're really rolling through here. So we're trying to forecast revenue and all these different things for plumber head counts, which are driven off of job counts. We're almost through with this part. So we got plumber head count, tier 1, 2, and 3, the hours. Now what we can do is say we can do some metrics to say average hours per month per plumber. And don't worry, this is just a monthly detail. There'll be executive summary level data on all this that doesn't include all the different details, but we do need to show the details for all the, just so you can kind of make sense of the assumptions when you're looking at it. So average hours per month per plumber. And this is a simple calculation doing total hours divided by total plumbers. Here, 0. So on average, tier 1 plumbers are doing 25 hours a month based on the assumptions of 100 total jobs per month for tier 1, average jobs per plumber 17, and average hours required per job an hour and a half. And here's where you really get into the unit economics of this is you can then say, well, if I'm billing, for tier 1 $20,000 and I'm paying plumbers, a wage of, for tier 1 $20 an hour, you really will be able to see the unit economics that are going on here. And we're going to summarize everything on an aggregate basis, on a per tier basis, service tier. Okay, so this is just a good, like almost a sanity check on your numbers. So here, tier 3 is at 180. So what does that mean? 180 hours a month per plumber. And why is that? Well, we're saying, the average hours required per job is 30. And there's 10 jobs a month. And again, these are going to be way bigger jobs, so that makes sense. Okay, cool. So yeah, I would expect that number there. Just want to make sure the logic is correct. All right, what do we need next? We're getting close to starting in on expenses. let's see. So we have this, that, average hours is taken into account. Okay, yeah, actually, I think we have all of this. Um, yep, I did this one. Add calcs to revenue assumptions that show profit per job based on, yep, we'll do that. Truck count. And so, yeah, for this one, I want to show actually on here expected profit per job if possible. I'll have to go through the calcs, but that's going to be after we get through this monthly detail. Okay, so if we roll this up, we can see job count, revenue, plumber head count. Update the label here, total monthly hours. Now this one, let's see, so average hours per month and then a weighted average would just be the same calc but down to the totals. Weighted average is something you'll definitely use a lot in modeling in general. Always weighted average hours worked per month. Alrighty, cool. Love how this is going. So we got our activities. Now I believe I can start on, let's see, activity and revenue. Then we're going to go into expenses. Now, for expenses, I believe, oh, we're going to need to, well, I guess we can just assume the total plumber head count is equal to the truck head count because each plumber's got to have their own truck. So total plumber slash truck. Because there's going to be variable cost tied to that. Okay, so what do we want to do first here? So we have hourly wages. So let's put that in. And what I want to do is a calculation showing um, total revenue, job revenue, less hourly wages, less average equipment cost per job to show a nice gross margin of that. Now, these other variable costs we'll put below that, but I think it's really important to see, okay, I have these plumbers bringing in this revenue, I have to pay them Y, and there's variable cost of materials of X, and then what's my profit per job before I have to do all this other overhead. So we'll do wages, total wages, and then right below that we're going to do payroll taxes, benefits, total payroll costs. Now this is pretty simple calculation. We'll take the total head count here times, and then we just do times index, average hourly wage of these tier 1 plumbers, match up the year, which is in E2 with this row 0. So now that's going to give me the total wages of all of tier 1. Now hold on, does that look right? So 5.9. Oh, times hours worked. So this is why we did all that other stuff. So total head count times the wage rate per hour times hours worked. Now let me think, do we do the aggregate or the per? No, so I don't need head count, I can just go total hours worked because this is already multiplying the head count by the hours. So total hours worked times the wage, so saying 3,000, so 150 hours total. Just check this, yeah, 3,000. So $3,000 is split between 5.9 plumbers. Now, if I were to adjust the assumptions and say, average jobs per plumber per month, or average hours per job was, let's say, 3, now you're paying $6,000 a month. And we'll also do a per plumber calculation below this. Okay, so I just want to make sure this is right. So total job count times hours per job. Yeah. So you've got 6 plumbers doing 300 total hours. 51 hours per plumber, which would be $1,000 a month at $20 an hour. Okay, so that math makes sense to me. Let's drag this down. And then I want, that goes right. So 7 and 8 are right below, so that's fine. You can see the tier 3 is a bit higher with their wages, so you've got here only barely 2 plumbers making $10,000 each almost, because here we're saying it takes 30 hours a job. There's 10 jobs a month, and each plumber will take on only a total of 6 jobs per month. So if I were to do 12 here, each plumber takes on 6. There's only going to be 2 plumbers doing a total of 360 hours of work. So you can see where we get that there, 180 hours per plumber, which is like a lot. That's like, well, I guess not that much, 45 hours a week. So that'd be $25,000 in wages for them. And we're charging $60,000 in revenue. So there's one of our key margin calculations. But I want to do wages, and I want to include payroll tax and benefits, which is going to be that amount times this. Payroll tax and benefits, and then total payroll cost be that plus that. And then we also want to do let's put this here. We want to do total materials and equipment cost per tier. Oh, materials, equipment costs. And for that, I'll do, let's see, how's this work? So average, so this amount, so we want to do index 11 times the job count. And I believe that could just be drug down and over. Let's see, so this is then doing 15 jobs and then times 12. Yep, that works. Okay. And then we can see let's break it down. we can show, oh shoot, what did I do? Copy. We can show average, no, not average, gross profit per tier. And that's simply going to be our total revenue. Actually, shoot. We'd have to break payroll taxes into each one. Um, or I could just evenly divide it. How do we do this? Because I really didn't want to put payroll taxes into each tier as well. Because it seems a little redundant. Since it's the same rate. You know what? Maybe it's not the same rate. Because it's possible um, the benefits could change. Let's lower all this. It's possible that tier 2 and 3 might have better benefits than tier 1. So let's say payroll tax and benefits. Why is this not copy and pasting? I don't know. Okay, tier 1. Oh, this is merged. Okay, now let's try it. There we go. So let's just keep it, let's say 15, 20, 25. Now benefits could be things like insurance, 401k, all that sort of thing. So potentially, it definitely could be different per tier. So let's account for that. So 1, 2, 3. For each tier. Total payroll. Now these actually don't need to be so dark. These can be just a top and bottom border with a light. And then this one will be total payroll costs. So what I want to do here is actually just take this amount times expense assumptions here, and then that can just drag down. And then we have the total there, and then total payroll cost is that wages plus that number now. And I believe materials equipment. Well, let's just drag this over and make sure it's correct first. Okay. So wages I feel good about. Payroll taxes benefits. So that's amount times D31, 32, and 33. That looks good. Let's get the light line style. Okay. So now we can do gross profit is going to be per tier. So you go total revenue minus wages minus payroll tax and benefits minus materials. So there's what the company is bringing in gross profit after paying all of their labor and materials expenses. Now let's make sure this makes sense. So this should technically be just this total revenue minus this total minus this total. Perfect. Okay, so that sanity check is good. We'll go gross profit margin is just this total gross profit divided by total revenue. All right, we are just cooking along here. Now this gross profit margin is going to be really important because this is essentially how much you're making more as you continue to scale up. Now the margin's going down. Well, it's staying around 34% actually. It starts a little bit higher because we don't have tier 2 and 3. Now tier 2 and 3 obviously have a little bit lower margin. Um, we can do some more stuff here. I could show average gross profit per job. So average gross profit per job by type. So this is actually a cool one. This will be average gross profit per all jobs. Now here I can take the total gross profit divided by the job count. And I think all these things are going to be really important to understand if you're going to build this business and really want to understand the economics of what is happening here. All right, and then we can drag this. And then I believe this can just go down. Yeah, total. And people will pay you a lot of money to do these kind of analyses. A lot of money. You could easily bill, I do 165 an hour, but you could bill all kinds of different rates. It just depends on what you're comfortable with and how much volume of demand you have for your services. All right. Now this seems low. Well, I guess not. So tier 1, you're charging $200 a ticket, and you're making about 50% gross margin, which makes sense because 51%. So that's taking the total job count you did minus the total gross or divided the total gross profit divided by the total job count. So each job is generating $101 for the company. Now this is obviously before, we've got other variable costs per plumber, um, insurance per truck, maintenance per truck. Um, so all these three, we've got how much revenue is paid with credit card. We've got credit card fees and all this other fixed expenses to also account for. But I wanted to do this calculation because this is like the base, like how much are you making from the jobs before your overhead starts in. So you got to pay your labor, pay the wages, pay the materials, collect money from the customer. Each job is generating this much money. On average here, you can see you're doing $100 a job, 100 jobs. So you're making 10,100 in profit, which is that number. All right. This is really very, very good. Um, so those are expenses, wages, materials, gross profit. Now after that, we can do, um, let's do, let's actually do a new section. This is going to be called other overhead items. Now for here, we've got, so we did this, we did this. We've got these three sections to do. And then we should be good to go on that. Then we move on to other fixed overheads and continue down the line. One second. We still got people here. Oh yeah, holy cow. Welcome back, guys, if you're here yesterday or not. Man, the stream's really doing great. Good to see you guys in here. Anybody saying anything? Nope. Quiet bunch, but that's fine. I'm happy to be here building these models. All right, let's go here. Overhead items. So we're gonna have a bunch more sections like this, 3 more sections. And then we'll have after that all of the fixed costs. So what's the first one here? This is other variable cost per plumber. This is insurance and maintenance. Now our truck count is actually going to be essentially mirroring the plumber count. And so when you go do the CapEx and figure out how many trucks you need to buy to scale this thing, and those will flow to depreciation expense. You'll look at the end of year numbers, I guess, or the mid-year, and just try to estimate, when you have to have a certain amount of trucks and try to scale that out. All right, so I got all of these. So all I need to do, these are all multiplied by the same number, which is plumber truck head count. So that, and then we'll go times index here, 16, matching E2 against 4. So that is that. Now I might do another, like after this is all done, I might do a total calculation that takes into account all variable costs against revenue. But we're gonna get, I mean, essentially you're almost just getting down to Ebitda at that point in cash flow, so which is we're already gonna have, so we'll see. All right, so head count times that. We can lock these. Now this can just drag right on down. So here's your other variable overheads. 16, 17, 18 against the count for each type. Okay, and the next one will be 21, 22, 23. So we just simply go back up here. And then what I say, 22. Oh, nice. So it's actually already spaced out correctly. And then same deal. Take the count. And then 28. Oh, wait. 21, 22, 23. Go back up here. This is 21. And then this one is 26, 7, 8. Patterns help is with not making errors as well. I try to you look at the numbers to see they should obviously be going down. They should match whatever patterns on the assumptions. Okay, so we have other total overhead costs. Go top, thick, bottom. And then you can really see gross profit after other overheads. And here, let's see. This is total other variable costs, total monthly insurance, total monthly maintenance. Okay, and then here, so we'll go top double. Now we can say, well, wait, where's our final gross profit? Here, minus this. And so here's what we're making after all these other variable costs. Okay. Let's make these lighter. We'll do top and bottom with a light gray. All right. So we have that. That's a good number. Let's hide all or group these together. So if you want to see a really high level look, you could always hide that, and you got, activity, expenses, gross profit, other overheads. So here we are, we're at $9,000 a month starting in profit for the company. Um, we're paying plumbers, they're earning not a whole bunch. We get to, well, these tier threes are actually doing pretty good. But again, those are based on arbitrary assumptions. You'd go in here and edit these numbers based on what you think, and then you can see if they make sense by looking at this. I'll also pull an index that shows, like, when you change this, I'll put a number here that shows average plumber um, wages for each tier. I think that's actually really relevant, so you can easily see the changes if you change the assumptions. All right, now we have uh, more other overhead. So this is other variable overhead, and then we have fixed expenses, and here we just go the detail of that, drag it down. And where does this end? 105. Total fixed expenses. We're going to group all these into one whole total. Well, actually, no. Usually I separate them out. So let's do, this is total sales and marketing, which if you're going to be scaling, you'll probably have some sales and marketing costs. And then total general and administrative. Administrative. Okay, and then we have to calculate these based on, so one, if the date is greater than the end month, then 0. Otherwise, if the date in E4 is less than the start month here, then 0. Otherwise, if none of those are true, we want to pull the value per month in 41, match with E2, match with here, and 0. And that should give us everything we need. Lock this, lock that, lock this, lock the column. This can go down, lock here, and lock here. I believe we can just drag this down all the way. It looks good. Give this a space now that we have the formula in there. G&A. And these can all be grouped. Now, so this looks like it's scaling out just fine. Let me make sure. Let's put some numbers in the last row. Oh, wait. Drag it over. And what's the start month there? August 2025. Okay. So there it starts August 2025. So that's working. And then make sure everything stops on the end month. Perfect. Perfect. And here, let's check these. 32, 33, 34. And those are starting in August of 2025 as well. 34. Year 3. Okay, that's right. And stopping in July. Okay, looks good. So then we have total fixed expenses. We're just plugging right through this thing. This plus this. Now we have other costs we need to put in revenue or credit card fees. Credit card fees. That's really a G&A, so let's put that in there as the last item. And that's just going to be a variable based on total revenue times the amount we think will go through credit cards times credit card fee. And okay, good. So that's already, oh, no, this needs to be drugged down. Okay, so we have this. Perfect. Now we get down to Ebitda. Ebitda is going to be our gross profit here minus this. Okay, so we have a little bit of burn going on here. Let's see if we get profitable. I'm assuming it will. Yep, so there's the revenue finally starts to cover. We'll also do the margin. This divided by total revenue. This is basically your profit margin. Okay, well, pretty good progress here. I mean, this is quite a bit. It all looks accurate. I don't see any errors or even feel like there's potential for errors here. Everything's been checked. And this is essentially your monthly detail. Now there's going to be some other things we have to add in the debt schedule for this funding source. There's going to be CapEx, there's going to be startup cost, there's going to be exit value, taxes. I don't know if I said that. But everything is going to run off of what we've already done, or most of it will be. So that's good. We got all this stuff done today. We'll do an annual detail and get tomorrow will be a lot of summaries. We might get into the income statement. I don't know. But thanks for viewing. Wow, 200 views today. Really great. Don't forget, check out more smarthelping.com. I got all kinds of financial models that are just as detailed as this. You can buy everything for $1,000, $9.99, or you can buy by category, SaaS, real estate, industry specific. That's where this model I'm working on now is going to go. Joint venture distribution waterfalls, accounting tools like tracking receivable payables, inventory tracking, budgeting, cash conversion cycle. Also, a lot of human resource tools I've got in here. A lot of things in Google Sheets for like tracking employee data, training tracker, employee scheduling, hiring and firing tool, all sorts of things. Personal finance stuff, some more Google Sheet database structures, a lot of cool stuff in here. Sales pipeline. This is one that gets overlooked a lot. The sales pipeline CRM is really good for any business that needs to keep track of how their clients move through the pipeline. I did some really cool stuff for car salesmen in here, salesperson, as well as like just a general sales pipeline if you want to track customers through different stages. There's some really cool Google Sheet structures here, CRM and Excel as well, and then general business valuation. All right, well, happy Tuesday. We did a lot here. I know it was only an hour and 7 minutes, but this was really good. This is the main meat of the model. Tomorrow we'll get through the rest of the monthly detail, the annual, and we'll start adding more summary pages. And let's see, do we do the truck count, plumber head count, based on activity? So that's done. And then here, I still want to add calculations to this tab. Also, this needs to be reformatted. I guess the font, can I change the font here? Oh, that looks a little better. These are just the references to the different, what each tier of service means for the plumbing business. So you have a reference on what I actually mean by the tiers. Now, if it was like an electrician's company, these tiers of service obviously would be different. Um, but probably you could take the same methodology, um, where you have like electricians of tier 1, tier 2, and tier 3, and fit that in there. I think that should be, workable. All right, I'm out. See you guys.